we have to go a quarter, 2 quarters, 3 quarters without much to show for all this volatility, truthfully, it all comes out in the wash. It's not the end of the world. If you are looking to do something that is a little bit more proactive, what you're probably doing is sticking to the stocks that are working at the moment. And those include energy, oil stocks. Valero still looks great, all of the refiners. But again, that's a fairly narrow lane. Most stocks are just chopping.
Hard to really have some high level of conviction anywhere as long as we remain in this sort of murky, foggy area, right, Malcolm?
Yes, but I think 4 weeks ago, when this whole thing first started, we could make the case that it's probably going to be short-lived. It's probably going to be a blip on this quarter's earnings reports. It's probably going to be a thing where it's a temporary shock to the system. I think as we go into now, earnings season rolls over into next week. We have CEOs presumably telling us that they can't quite forecast what their transportation costs are going to look like, what their energy costs are going to look like. The guidance that they give is going to be less sure than it would have been had this conflict been over before March was over. And so I think that we have to consider that negative sentiment and the weight that it could have on investors coming into earnings.
I think it's a great point, right? The numbers are still expected to be good.
Yep.
Earnings expectations and estimates, even moving forward for the quarters ahead, are still good. Malcolm raises a good question, though. What happens if the narrative starts to deteriorate? How much say will that have into how the market trades?
Yeah, so I think CEOs are going to be